Okay, Assalamualaikum warahmatullahi wabarakatuh. Bismillahirrahmanirrahim. Okay, today for financial accounting one student, okay, now is week 4. What we have to cover is topic recording process. Okay, topic recording process. Okay, let us start. Okay, let's start so that I will share screen. Okay, so this is our slide for today. Okay, according to the textbook chapter 15 accounting system and book of account. So this is actually for the coding process. uh, okay, what we will cover for this topic. Okay, so this is the subtopic, or what I will be highlighted. Okay, will be highlights for this chapter is the first one, okay, accounting cycle. Okay, the second one, function of journal. Okay, the third one, function of cash book. The third one is petty cash book. All right, so we go first for the first part of this topic, which is accounting cycle. Okay, this is accounting cycle. Okay, uh, okay, this is accounting cycle. Okay, we start from the sources of document. Okay, we start from the sources of document. Okay, okay, this is the sources of document. Example of sources of document. Okay, example of sources document in accounting. Uh, the first one is invoices. Okay, invoices we prepare for credit transaction only. Okay, for credit transaction only. For example, purchase goods on credit. Okay, sales good on credit, beli ataupun jual barang secara kredit. Okay, dia punya documents adalah invoice. Okay, the second one is official receipt or receipt. Okay, this is for transaction that we made using cash or check. Okay, the third one is bill, electricity bill, telephone bill. Okay, uh, TNB, electricity TNB bill. Okay, uh, uh, what else for bill? For example, rental bill. Okay, it can also be official receipt for rental. Okay, next we have checkbook. This is also sources of documents. Okay, and then we have credit notes, debit notes. Okay, all of this function. Okay, uh, for each document you have to read your own, and this textbook or other sources, okay, for you to familiarize within all the source of documents that we have in accounting transaction. All right, so when we receive the documents, and then what we have to do is we record in journal, or we record in original books of entry, prime books of entry. Okay, or what we call in Malay buku catatan pertama. Alright, so buku catatan pertama, which is journal. Okay, journal, we have two types of journal: general journal and specific journal. Specific journal is divided into four item: purchase journal, sales journal, written inward journal, and written outward journal. That's journal. Okay, so we will cover on that part today. Okay, journal and also cash book. Okay, then what we have to do is posting to ledger. Okay, that one is posting to ledger. Okay, posting to ledger, I will teach you for the next classes, for the next video. Okay, how to post to the ledger. Okay, then what we have to do is we prepare trial balance. This trial balance is trial balance before adjustment, and then we close the nominal account. Close nominal account. What means by nominal account? I will explain you when I explaining about ledger. Okay, we have two types of ledger, and then from that subtopic, from that area, you can understand, you can differentiate between nominal account and permanent account. Account, we also have two types of account. The first one is permanent. The second one is nominal. Permanent is tetap, and nominal is sementara. Okay. and then what we have to do is we prepare final account. Okay, what is the item under uh, final account? That's in this stage we need to prepare, SPLOCHI, okay, statement of profit or loss and comprehensive income, and we need to prepare SOFP. Okay, that's all for final account that's we cover for this syllabus. Okay, because in financial accounting 1, we only preparing the sole proprietorship account. So that sole proprietorship only needs to prepare this type 2 of final account. The first one is PROCHI, the second one is SOFP. Okay, statement of profit or loss and comprehensive income, statement of financial position. Okay, and then what you have to do is adjust the trial balance. Okay, how to adjust the trial balance according to the adjustment. Okay, for this part, we will learn about 3 type of adjustment. The first one is depreciation. The second one is doubtful debts, bad debts related to account receivable. The third one is related to accrual and prepayment. Okay, these 3 adjustment that we will cover for this area adjustment topic. And then what we have to do is post closing trial balance. Okay, after adjustment, we do the post closing trial balance, and then we do the reversing entry. Okay, and the last one, okay, what we have to do is to the next period generalization. Okay, so we continue again to the accounting flow, starting from the sources of document. Alright, so this is the accounting flow. Okay, okay, uh, now we go deep to the second step of the second cycle in the accounting process. Okay, the second step in the accounting cycle or accounting process. What is the second step? Is preparing journal or record in journals or books of prime entry, buku catatan pertama. There are 2 types of journals and cash book. Okay, there are 2 types of journal actually. Okay, there are 2 types of journal. It's not cash book here. Okay, hold on. Alright. There are 2 types of journal. Okay, not and okay. There are 2 types of journal. Okay, the first one is general journal. The second one is purchases journal. The third one is sales journal. Okay, the fourth one is written outward journal, and the fifth one is written inward journal. And next we have number six, we have cash receipt journal and cash payment journal. But for this syllabus, for financial accounting 1 syllabus, okay, we didn't cover this subtopic for cash receipt journal and cash payment journal. Why? Because for cash transaction, okay, we straightforward will record in cash book. Okay, we will record it in the cash book. Okay, so now let's move to the next, to the first type of journal, which is general journal. What is general journal? Okay, this general journal, the purpose of general journal to record sales or purchases of non-current asset on credit. Sales or purchases of non-current asset on credit. Okay, the second one, to correct any errors. For example, we have correction, maybe omitting some transaction, or we forgot to record the one side of the transaction. We only record the debit side. We forget to record in the credit side. So that's become error, and then we have to correct the errors. So how to correct the errors? We have to record in the general journal. Okay, opening entries. Okay, what is this opening entries? Okay, we have an example for opening entries after this. Okay, and then I will explain later. Transfer. Okay, transfer. What means by transfer? Transfer for for transfer. Okay, I will explain later. And then next is withdrawal of inventory for owner own issue. Withdrawals of inventory. Okay, withdrawal of inventory means that the owner withdraw the inventory. For example, withdraw the sugar. Okay, withdraw the flour. Okay, from its from his shop for personal use. Okay, so that is withdrawal or drawing. So this drawing we will record it in the general journal. And the last one is adjustment. Adjustment. Okay, I already explained. I already asked you before the adjustment that we have in financial accounting one, which is accrual and prepayment, depreciation, and account receivable adjustment. Okay, so this type of adjustment, when 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 the company or when the business have adjustment of this, for example, for depreciation, how to record? That's adjustment that we have to record in general journal. Okay, all of these transaction we will record in general journal. Let's look at the example. Okay, this is an example of general journal. Okay, so this is the format of general journal table. Okay, they have 1, 2, 3, 4, 5 column. They have column date, details, folio, debit, and credit column. Okay, so what is the transaction here? Purchase office furniture worth 6,000 on credit from Alan. Okay, from Alan. Okay, Alan DIA 1B. So the keyword here is credit transaction. We purchase office furniture. We purchase non-current asset. Okay, by credit. So that's we need to record this transaction in general journal. So how to record? Okay, put the date here. Okay, so what's the effect of the office furniture account when we purchase new office furniture? So the office furniture will be increased. So that this is actually the debit side. Okay, what is the amount? 6,000. And then what we have to record in the credit side? Okay, name of accounts payable. Okay, name of account payable now is Alan because Alan is supply office furniture to us. Alright, so how much? 6,000. Okay, so for the portfolio, okay, what means by GL? GL is general ledger. Okay, APL is accounts payable. Alan is our accounts payable. Okay, clear class. For next, okay, this is example. Next, another example of general journal for opening entries. Okay, this opening entries. Okay, who is Encik Kamal? Encik Kamal wishes to begin a new set of accounting books. Begin a new set of accounting book. Okay, he has the following assets and liability. Okay, dia baru je nak buka buku ataupun dia nak set up baru untuk accounting books. Yang mungkin sebelum ni incomplete record dia tak nak. So now dia nak buat yang complete lah. So dia dah jalankan bisnes maybe 2-3 tahun. So dia dah ada dah dia punya baki-baki account yang terkini lah. So this is the current balance of all the accounts regarding for assets and also liabilities. So how do we record it in the general journal? Okay, same goes to the previous transaction. Okay, so asset, since asset is a debit balance, okay, debit balance, and liability is credit balance. So what we have to do is all the asset item here we post in the debit side. Okay, GL refer for general ledger, right? And then we post in the amount in the correct column, which is debit column. Okay, debit column. Okay, next, what we have to do is transfer all the liabilities item in the credit side. We have loan, we have supplier, name right, and we have another item here, which is capital. What is capital? Still remember our formula of accounting equation? Are you still remember of our formula for accounting equation? What is our formula of accounting equation? Okay, asset equal to liability plus capital or plus equity. Okay, now we have the total of asset. You have to total up here. If I mistaken 15,000. 15,000 the asset. Okay, liability, how much the liability? Okay, you can also add here, liability only 6,000. So can you calculate what is the capital value here? Okay, can we calculate what is the capital value here? What is the capital value here? So 15,000 minus, oh so sorry, 6050 that one is 6450. Okay, so when we calculate 1,000 and 15,000 minus 6050, so our capital is 8,950. Sorry. Nine, eight, 8950. Okay, this is our capital for this opening entries. Okay, this is the current capital value lah for Encik Kamal. Okay, so next, the second types of is purchase journal. What is the purchase journal? Okay, this purchase journal, the function of purchase journal to record goods on a good purchase on credit. So the keyword here is good purchase, purchase. Okay, the next one is good purchase must be credit transaction secara hutang. Okay, so what is the sources of document? Sources of document is a invoice received from supplier. Invoice received from supplier. This is the document. Okay, original invoice received from supplier. So how to record this purchase journal? When you look at the transaction here, okay. So April 10 bought goods, okay, goods with 100 on credit, okay, on credit from Ali, invoices 321. Okay, invoice number 321. Okay, how to record in this purchase journal table? So we have 1, 2, 3, 4, 5. Okay, same goes to general journal, 5 column here. Okay, we have column date. So just transfer the column of date here. Okay, which one is column of date? Okay, April 10. So now April 10. Bought goods worth 100 on credit from Ali. Okay, so we already purchased the goods from Ali. Okay, so you just put the name of Ali here under particulars, invoice number, okay, 321 here. Folio means that after this, after we settle part of recording in journal or first book, what we have to do is posting to ledger. Okay, I will teach you how to post to the ledger in the next video session or the next class or in the next tutorial class. Okay, a purchase ledger 1 means that we have to post this transaction in Ali account or in purchase ledger 1. Purchase ledger 1 is Ali account. Okay, so that's all. Okay, that's how we record it in the purchase journal. Okay, next we have a sales journal. This is a sales journal. Why we have to prepare sales journal? Because we want to record all the credit sales. Okay, and then what we have to do is we'll send invoice to the account receivable. Okay, so now how to record sales journal? Same goes to same likes with the purchases journal. What the differences between sales journal and purchase journal? This is for sales transaction in credit. Purchase journal is for purchase transaction in credit. Okay, credit means secara hutang. Ambil dulu barang, okay, jual dulu barang, kemudian baru bayar dan terima duit. Alright, so how to record in the sales journal? Sama je macam purchase journal tadi, that we have a date here. Okay, we have a date, we have a particulars, we have invoice number, we have folio, and we have what's amount for that transaction. For example, now we have sales. Okay, April 11. Okay, Mr. Lim, invoice 123. Okay, SL1 refer to sales ledger number 1. Right? Okay. So this is for sales journal. What about the next journal is written outward journal. Okay, this is written outward journal. Okay, when we want to record the transaction in written outward journal, okay, to record transaction involving goods returned to supplier. Goods returned to supplier. Why we have to return that good to supplier? Maybe because of damage of goods. Maybe because of wrong specification, wrong brand. Okay, that's why we need to return back to the supplier. So supplier will given us credit notes. Okay, this is sources of document. Okay, why credit note? Because they want to reduce our debt. Okay, kita punya hutang berbaki debit. So that's why dia bagi nota kredit to reduce our debt. Alright, so how to record? Sama je dengan sales journal dengan purchase journal. So they also have a date column, particulars, credit note number, folio, amount. But you have to primarily realize, okay, how to record this journal also. Okay, for example, the condition or written out journal ni, okay, adalah the previous transaction, the previous purchases of goods must be also in credit. Okay, for example here, Ali. Okay, now you want to return good return 10 ringgit to Ali. Make sure that the previously that we purchased from Ali also in credit term. Okay, let me check. Ali, purchase journal. Here, Ali. Ali, we purchased already on credit. Okay, on credit here. On credit, 100. So that when we want to record in written outward journal, we can record in the written outward journal because of previously that we purchased that good in credit term. Right? So how to record? Same goes to the sales journal and purchase journal. Okay, I forgot to tell before this. Okay, for all the journal, we have to total up. We have to total up. Okay, for example here, 10 ringgit plus 15 ringgit. So the total is 25. Okay, how to do? Okay, what to do with the amount, the total amount? We will transfer to the written outward account. This is the third process, which is we have to posting to ledger. Okay, in the next session. Okay, next, okay, for written outward, this is related to, written inward, this is related to customer or account receivable or account receivable. Okay, related to our credit customer, which is account receivable. Okay, so for example now, April 16, good was 20, written by Lim, credit note 1111. Okay, so our customer return back to us, okay, the goods. Why? Maybe because of the same reason, a wrong specification, wrong brand, maybe damage. Alright. Okay, so that's when, okay, the condition in the written out inward journal same goes with the written outward journal. The previous sales also need to be credit transaction. Okay, maksudnya adalah sebelum ni punya transaction, for example here, who is return the goods? Okay, Lim, right? Okay, Lim now. April 16, goods were 20 written by Lim. Make sure that the transaction we made with the Lim before this also credit transaction. So who is Lim? Account receivable. Okay, so how to check which one is Lim? We back to the sales journal. Kembali kepada sales journal and you notice that Lim here, okay, previously that we sales or we sold goods on credit to Lim. How much? 200. Okay, in April 11. And now Lim returned back to us. That's good. 20 ringgit. Okay, so how to record this transaction? Put the date April, put the date, transaction date, okay, the name of accounts payable, okay, credit notes account number, and the folio is sales ledger 1. Okay, sales ledger 1, how How to check either sales ledger 1 is correct or not? Okay. Sekali lagi, we will check in the in the sales journal. Okay, LIM, sales ledger number 1. Okay, sales ledger number 1, of course, LIM. Alright, so uh, this is for written inward journal. Same goes to the written outward journal and all others journal. We will total up this amount and then transfer to written inwards account. Okay. Okay. Supposedly you have to add here. This is the last date for April. Okay, 30. Sorry, 30 here. Alright. So next, we already finished. Okay. Actually, we have two types more for two another types of journal: cash receipt journal and cash payment journal. So cash receipt journal, why? Okay, this journal purposely to record the receipt of cash. Okay, any transaction in cash receipt. Okay, penerimaan tunai. For cash payment journal, for pembayaran tunai lah, cash out, cash flow, cash out. Okay, but in our syllabus, we not cover this part because of all the cash transaction we will directly post it to the cash book. Okay, not not in the cash payment journal and cash receipt journal. So that, what is the cash book? Okay, this is a cash book. Involve receipt and payment of money, either cash or check. Okay, cash book involve two types of payment, either cash in hand or cash at bank. Okay, cash in hand means that we hold the cash in the hand. We hold the cash in the petty cash, in the what we call cash book, cash register. Okay, uh, and then either in check or using check. So using check means cash in bank. So cash book comprise of two types of account, which is cash and bank. Okay, it is also considered as book of prime entry. That's why we not cover for cash payment journal and cash what we call cash payment journal and cash receipt journal, because we directly post it to the cash book. Okay, so this is also we call as book of prime entry, buku catatan pertama. Okay, so remember that when we receive a transaction, when we receive the documents, make sure that this transaction is cash or credit. When cash transaction, directly into the cash book. When credit transaction, okay, maybe we will record it in the general journal, sales journal, purchase journal, written inward journal, or written outward journal. Okay, for cash transaction, directly posted in the cash book. Okay, how the cash books looks like. Okay, there are two types of cash book. The first one is two-column cash book. This is the two-column cash book format. Why we call two-column? This is the first column and this is the second column in the debit side. Same goes to credit side balance. They also have cash and bank balance. So that is a two-column cash book. Two-column cash book. Right? For three-column cash book, how about three-column cash book? This is three-column cash book. The first one is discount allowed, cash account, bank account. Okay, for debit side. And for credit side, they also have discount allowed, cash and bank. Okay, let's look at any example, any transaction. Okay, for example, we receive sales. Okay, cash sales. Okay, 1,000. Okay, so how to do? Okay, for example, in April 5. So sales here, we receive cash, 1,000. So cash lah. So all the cash inflow, okay, we will record it in the debit side. Cash outflow, duit keluar, we will record it in credit side. Ni out, that's in debit side is in. Okay, so for example, for the credit side, maybe we purchase or we pay the expenses. Okay, then we purchase goods using check. So for example here, we purchase goods using check. Okay, so what is the particulars is purchases. Cash is not consists of cash purchases. For example, 500. So 500 purchases like this. Okay. How about three column cash book? Okay, three column cash book. For example, we have account receivable. Before that, we already sales to that account receivable. For example, our account receivable name is Nabil. Okay, for example, Nabil. Okay, our account receivable before this that we sold goods on credit to Nabil 1,000 ringgit. Okay, 1,000 ringgit. So from 1,000 ringgit, we also given cash discount to Nabil if Nabil pay early the amount. For example, 10% we will give if Nabil pay back within that period that we given to them to Nabil. Okay, so for example now April 10, okay, Nabil, we receive payment from Nabil, okay, by cash, for example by cash, okay, we receive only 900 because 10% we give discount allowed. 10% is 100. Sorry. Okay. But what is the Nabil nilai apa Nabil punya account receivable, Nabil punya hutang dengan kita adalah 1,000. Okay. But Nabil hanya bayar RM900. Okay. Why Nabil bayar RM900? Because of we give Nabil cash discount. Okay. This is we call discount allowed. Okay. Same goes to the credit side. Okay, sorry. This is not discount allowed. This is discount received. Ini adalah discount receive. Discount receive, we receive discount from accounts payable. From accounts payable. Nabil tadi adalah account receivable. So ni kita terima pula discount. That's why we discount receive. For example, kita ada hutang 2,000. Okay, kita bayar hanya 1,900. So 100 lagi tu adalah discount yang kita dapat sebab kita bayar secara cepat. Maybe dia punya credit term tu sebulan tapi kita bayar dalam masa 2 minggu. So our supplier bagi cash discount untuk menggalakkan kita bayar cepat lah. Okay, this is cash book. We have two types of cash book, 2 column cash book and 3 column cash book class. Okay, the last part is petty cash. What is the petty cash? This is the for small amount of expenses. Okay, for small amount expenses, we only use the cash in petty cash or cash in the business for example in cash register. This is what you call petty cash. Okay, it is usual to draw out check. Okay, maybe using check also or using cash in hand to make a payments for small amount. It is impractical to write out the check. Okay, is it okay? Sorry, okay. So petty cash, nama pun petty cash. So maksudnya dia menggunakan cash. It's not check. So because of it's not practical to use the check to pay the small amount of expenses. Class, okay. For example, they want to purchase a stationery for 10 ringgit. So no need to, it's impractical to prepare a check for 10 ringgit to pay that stationery expenses. So they only take out from the petty cash box to pay the expenses of stationery. So this is petty cash. Alright. Petty cash also have a petty cash book. Okay. I will show you later the format of petty cash book. Okay, class. That's all for today. Okay. Okay. For what we already cover for this. Okay, I repeat. Okay, so we'll cover already about the accounting cycle. Okay, a function of journals. Okay, what is the function of journal and function of cash book? Okay, and also petty cash book. Okay, still remember. Okay, we have a journal two types of journal actually, specific journal and general journal. Okay, for specific journal, we have four types. Okay, which is we have the first one, the sales journal, purchase journal, return inward journal, and return outward journal. And then cash book. Okay, cash book, we have two types of cash book, two column cash book, three column cash book. Okay, cash book is also considered as a book of the prime and pre. Same goes with journal. Journal is the prime book of M3. And the last one what we cover, okay, is petty cash book. Okay, so that's all class. Thank you. Assalamualaikum.